Hello everyone. Good morning to you from this part of the world. It's 8:17 a.m. West African time. That's about 7:17 a.m. UTC. I know it's a little bit early, earlier than our usual timing, of course. And this is basically due to a couple of reasons, one of which during the course of the weekend I wasn't able to do my usual weekend market analysis due to my time constraint. I was very busy all through the weekend. Advisable that we come together early today so that we can actually look at what is going on in morning mastery as we get prepared for the new week. So once again, you're welcome to today's Forex Morning Mastery. We've got a fresh week ahead of us, and already the markets are showing their hands right now. Oil supply headlines are shaking things up. We've seen the dollar continues weakness on Fed rate cut expectation, and gold, of course, is finding safe haven flows again. And so I would encourage you all to stay with me if you're a fan of any of these assets we are looking at. We are looking at the USDJPY, the GBPUSD, the US crude oil, and of course the XAUUSD. Stay with me because in the next 45 minutes to an hour, we are going to be breaking this down and of course map out the smart setup for this week. So before we go in, I also want to welcome the newcomers in the house. For those of you who are joining me for the first time, you're highly welcome on board. My own name is Sheriff Daramola, and we usually run this session 3 times in a week: Monday, Wednesday, and Friday, where we come here to understand what is going on in the market and use that information to strategically position ourselves for the next move, and at the same time manage our existing position. So once again, you are welcome on board. So with that being said, here we will be diving right into the business for today. And of course, it is our routine here to quickly run through the US dollar market dynamic, basically because the US dollar has a significant influence on these assets that we are monitoring. And if we really do want to have a better understanding of what is going on in that market, we really need to get in touch with the sentiment in the US dollar market, right? And of course, what you see on the chart here is the US dollar index. It is technically called the DXY. And for those of us who don't know, the DXY is an instrument that gives us an overview of how the US dollar has been performing within a specific period of time. And for me, I usually focus on the 4 hours time frame, as it gives me a balance between what has happened and what is likely going to happen. So what you see on your screen right now is the 4 hours time frame of the DXY, where I was able to capture the character of price action since mid-September. So we are talking about an historical data of about 4 to did what I would call a pullback or retracement at this point in time. And of course, besides seeing the technical reflection of the sentiment in the market, it's important we also understand why the dollar dropped a little bit last week. So we all know what the major one is: the Fed rate cut expectations. As you know, lower rates makes the dollar less attractive, and the fact that the Fed is saying that there is likely going to be 2 more rate cuts this year brought flows out of the US dollar. Then to support that loss of confidence in the US dollar is weak US fundamentals, as we saw last week. Debt concerns. We also had weaker safe haven confidence as a result of this. Then last week was also more about geopolitical tensions, trade tariff war. We saw a reignition of the US-China trade situation, which obviously added pressure to the US dollar. And as a result of this, other currencies gained significantly, like the euro. The pound sterling did well. The gold commodity did very, very well, pushing the US dollar lower. And also, we also understand in the last 2-3 weeks, the US government has been on shutdown, right? And most of these economic departments were also locked down. So as a result, there were data delays, and this obviously led to some uncertainty. And what happened? Market participants begin taking some profit off the US dollar market, and that led to this move that went all the way down into the $98.10 area. Now, if we look at things from a technical standpoint, you will see that price is back at that trend line identified here. So like I said, in the last 4-5 weeks, the market has been on an uptrend. As you can see, connecting the series of higher lows, we have a beautiful ascending trend line, and immediately price tested that trend line. What happened? We saw some buy pressure resumed around that area. So price did hit that key trend line support. So bargain buyers stepped in again with an attempt to continue that uptrend scenario. So with this sign of buy pressure here, we have a little bit of idea of what is going on and what may likely happen. So we are seeing some safe haven flow come back into the dollar again during the later part of last week due to global jitters. And then we also know there might be some oversold condition, which is a natural relief bounce around this area. So going into this week, what are the chances that price will maintain momentum above the structure, or are we going to see a situation where the trend line will be broken to incite a sell-off? So for me, this trend line here is going to be playing a significant role going into this week. So if the trend line holds, buying can continue. At least short-term US dollar strength is still very possible, considering the fact that price still remains above the trend line. But if the trend line breaks, then the downtrend may likely resume. That is more US dollar support line at some point as well. So if price remains above the key level and the trend line, we want to be looking out for buying ideas. We want to be looking out for patterns and structures that support buying ideas. But if price can break down this two structure, then we have no other choice than to consider selling the US dollar. And I also want to tell us that my own sentiment looking at the structure, and if you also consider the fundamentals, I want to point in the bearish direction, but it is not yet confirmed since price still remains above the trend line. So unless US data or Fed signals shift, the bounce may be short-lived. So we are going to be watching closely how price holds above the trend line for possible recovery or breakdown for a continuation lower. And to further guide the sentiment in the market, looking at the economic calendar, for the first half of the week, there are no major event from the United States. As you can see, Sunday, Tuesday, Wednesday, none at all from the United States. The major one that may likely come in, it's not really an high impact event, is the initial jobless claim count, which is considered to be another factor that the Fed might be looking at to consider whether or not to maintain the current interest rate. And it's still uncertain if this data will be released due to the shutdown of the US economy. Then on Friday, do we have anything? Okay, we do have the consumer price index, which is an inflation data. We don't know if that one is going to come up to as well due to the US government shutdown. Then we also have the S&P Global, which gives us an idea into how the manufacturing and service sector of the United States will be doing. Then we also have the consumer sentiment index. So all of these ones are coming much more later in the week if they happen, if they tend to happen, right? So for the first half of the week, there are no major events. So we're definitely going to be sticking to understand the behavioral patterns of market participants to make a decision in the asset we are monitoring. So with that simple information, with that information we have here, let's delve into the major assets on our watch list, and let's see how the dollar is faring and how I intend to capitalize on any opportunity here. So I see you, Jonah Aruna. Good morning. Glad to have you around. Trust you had a good weekend, right? So the first one we are looking at this morning is the US crude oil market, right? And if you look at what has been going on here in the last 4 to 5 weeks, it is quite clear that the market has been on a strong downtrend. So we can see we have lower highs, we have lower lows, lower highs, and of course price in the last couple of weeks has been doing more of lower lows and lower highs, tending towards that support line of the descending channel you see on my screen. And of course, this downward pressure we're noticing in recent time is as a result of traders, investors' worry and concerns about rising global supply, especially when OPEC Plus is expecting to increase oil output. Then besides the concerns as regards to oversupply in the market, there is also this India's uncertain stance on Russian oil imports. Last week, was it about last week or 2 weeks ago, Trump was said that India has promised not to buy Russian oil. No one knows how true that is, but I've not had any credible source from India stating otherwise at the moment. And this situation here now adds to the confusion in the market, as data suggests purchases may actually rise in the near time despite US pressure to cut import from Russia. So this mix of oversupply risk and geopolitical tension is keeping the sentiment cautious at the moment. So as a result of this, we can see that during the later part of last week, the market was more or less consolidating around the support line of that descending channel. So if I zoom in closely, you'll see price is oscillating within this area. Now the question now is, will this support line now become a platform that will send price recovering again, climbing higher, or are we going to see price continue that down movement? So to help me navigate this area, I have my key level for this week at the $57.25 area, as you can see here. Now, the reason why I have chosen this price level, first of all, it is psychological level, and secondly, it has played a significant role at least in the last 1 week, deciding the direction of price action. So at some point it was a support line, as you can see here. That was sometime last week Tuesday, before we saw price break down that structure on Thursday. And since that breakdown happened, what did we see? Continued selling pressure below that structure, as buyers are still finding it difficult to climb back above the $57.25 area. So will that be the case this week? As price going to climb up, breaking above this key level to emphasize buying strength, or price will remain below this key level to emphasize seller's strength? So that is basically what this structure tells me about the current sentiment in the market. Now, to help us enter whatever opportunity the market presents to us, let's scale down to our execution time frame, which is the 1 hour time frame. Now, on the 1 hour time frame, this was what I was able to come up with. As you will see, the week started strongly bearish. Price started somewhere around that key level, as you will see here, with a shooting star candle. And theoretically speaking, we do know what the shooting candle tells us. It tells us that sellers are still present in the market, right? And look at what happened. Price dropped into the $56.75 level. We saw some buy pressure, and then we saw another engulfing bearish candle bringing price into this area. So the breakdown of this support line for me triggered a sell. As you will see at the bottom of your screen, I have a sell position running on the US oil at the moment, though it's still in a loss. So I think price is doing a comeback to retest structure to continue that downtrend move. That is one scenario I am looking at. So if you want to be part of this move with me, selling below the $56.75 level is looking promising to sell at the moment. So placing a sell stop order below that area looks fine. And then we want to see how the market is going to react to this trend line. Is this trend line turning out to be a support line? Well, I don't know yet until confirmations gives me that sign. So we shall look out to see what happens around this area. Will sellers find it difficult to break through the trend line? If that happens, we move stop loss to break even, and then if we get taken out, we know that's it. So at the moment, I still want to lean bearish on the US crude oil, where a further breakdown of that trend line will further confirm that momentum to the downside. But if that is not the case and buyers continue to show pressure in this market, I am not willing to join a buy unless the key level is broken to the upside, right? And let me show you something on the 4 hours time frame. Let's go back to the 4 hours time frame. I want to show you something that caught my attention here from a technical standpoint. Now, this is the 4 hours time frame here, and look at this impulsive move into this area. Price climbed back up into that key level. The key level is the pink line you see there, and then price comes back here. So we might be seeing something like a reversal setup, maybe a double bottom structure, whichever case it may be, or a higher low. And then the key level may now serve as a neckline that could incite a bullish move, maybe back into the resistance line of that descending channel around the $59.50 level. So if price does not break above this key level, I may not be willing to join a buy. So at the moment, we maintain a bearish bias, and then let's see if price will break above this key level. I wonder why that $57.25 level disappeared on the screen. So that's it for me here. So I remain bearish while I keep monitoring price action. But if I can see a breakout of the key level and then price do some retest of that structure, maybe on the 15 minutes time frame, then I will be willing to join a buy. But if that does not happen, price remains below the $57.25 area, we maintain a bearish bias. Okay, I don't know if you have any questions as regards to my explanation so far. Let's see if there are any questions. So I will zoom out so we can mark out the structures accordingly on our charts, as we are going to be using it as a reference point to guide our decisions today. So I will take about 5-10 seconds off. Let's see if there are any questions before we move on to the next assets on our watch list. Stay tuned in, guys. Okay, I see you, Wokocha Kingdom, Jonah Aruna. Good morning to you guys. I'm glad to have you around with me this morning. Trust you all had a wonderful weekend. Okay, all right. So I guess we are all good to go. I hope we've marked out the structures accordingly on our charts. Let's see how the market will play out. Hopefully things goes as expected, and if anything new comes up, maybe something I didn't talk about during this session, maybe it comes up, I will definitely update us on my Telegram platform. So with that said, let's move right into the next asset on my watch list for this week. So the next asset I'm taking on this morning is the GBPUSD, right? And it's interesting how the structure has emerged in the last how many weeks now? I think a month. Yes, over a month now. That's about 5 to 6 weeks of historical data, and it's quite clear, as you can see. The market has been strongly bearish. Price has been finding lower lows and lower highs through the course of this time phase, and this emphasized the recovery in the US dollar. But if we consider the whole scenario around the recent developments on the dollar, the pound is currently caught between I would say a weak US dollar due to Fed rate cut expectations and US economic risk, and its own domestic troubles, that is the UK situation, like the soft UK jobs data and budget concerns. Now, with the way things are going, let's look at what has been going on since price came back into this resistant line. So I have two resistant lines here, the major one, which is the thick one, and the secondary one, which is the light one here. So if we zoom in, you will see that since last week Thursday, the market has been a little bit choppy, going into a consolidation around that particular area to emphasize how crucial this juncture is. So is it going to be sellers taking over, or pushing price down, or will the buyers break out of that structure, that is the resistant line of the descending channel, to continue the recovery? So it reflects what is going on here, reflects hesitancy to push the pound sterling much higher without stronger economic signals, making sentiment more balanced but cautious at the same time. Now, in order to drive sentiment, what can be the catalyst that could give us a clue of where price is likely going? Will price respect the resistance line to continue the downtrend, or is it going to break out of that structure? Now, if we go into the economic calendar, taking into account events from both economic dockets, you will see here that we are not seeing any major event until Wednesday, and that is coming from the UK economic docket. Now, the event we are talking about here is the CPI data. That is an inflationary data, the consumer price index. We want to see if inflation is still high in the UK. Of course, it's still going to be high, and if that is the case, the chances that the Bank of England will maintain the current interest rate increases, giving the pound sterling more opportunity or more room to rise. Then we also have the, which other one we have the retail price index, we have the producer price index as well, all of which are coming in by 6 AM UTC on Wednesday. So we may likely not see any significant move before this time, except there are some headlines that could trigger massive move on this asset. Then do we still have any other one? Okay, we have the retail sales on Friday, and this is much more later in the week. We also have the S&P Global from the UK on Friday as well. So it's more like the major move in this market will be happening during the second half of the week. Now, pending that time and in anticipation of that, we do understand that major key players in the market do have an information. They have insiders in this department that gives them first-hand information of what is likely going to come out, and as a result, they build a position ahead of that event. And this building of position ahead of that event usually transforms into a structural setup that we retail traders can actually use to help us position ourselves for what may likely happen. Now, to help us do this, we'll scale down into our execution time frame. That is the 1 hour time frame. Let's scale down into so this is what I was able to come up with on the 1 hour time frame. So the first 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 hours of this new week has shown us how the market is indecisive at this crucial juncture. That is the resistant line of the descending channel. As you can see, price during the last 9-10 hours has been confined within the 1.34435 and the 1.34220 area to emphasize the prevailing uncertainty at this particular point in time. And you know how we use our range bound structure whenever we identify them. We wait patiently for price to either break out of the resistant line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. And as you can see, that's beautiful engulfing candle springing out from that resistant line for us from a theoretical standpoint is a very good signal that sellers are still present in this market. And if we consider this in conjunction with the resistant line of the descending channel we identified on the 4 hours time frame, what do you think? It's likely going downwards, right? Maybe, maybe not, but theoretically speaking, it says it's going downwards. And to further support that idea, we want to see price break down, retest the support line of this range bound structure to trigger a sell. And that is basically the reason why I have a sell currently running on the GBPUSD. So though it's not yet confirmed yet, as you can see, the last 45 minutes has shown some sort of doji setup, which is more like an indecisive scenario at the moment. So the market is still not really sure of where it wants to go, and we quite understand that. The market is looking forward to the CPI data from the UK, the PPI data, and of course much more later in the week the S&P Global from both economies to decide what they want to do. So it's looking at the moment prices tending towards the downside. So hopefully we are part of that move at the beginning of the week, and of course we do want to be given enough breathing space for price action to move around. So my stop loss is somewhere right above this resistant line. In fact, it's right above the key level. So I want to give enough breathing space. So I'm looking at about 30 pips of stop loss on this particular sell position. So let's see what happens going into Wednesday's trading session. That is what I'm looking at on the GBPUSD. Now, if I want to consider buying, of course, you know how we do that. We want to see price break out of the resistant line of the descending channel, which interestingly shares a confluence with the resistant line of that range bound structure we marked out earlier. And we are not just going to jump into that buy right away. You know why? The momentum has been bearish for the last 6 weeks, right? And when price is breaking out of a key structure like this, it could turn out to be a false breakout. So we really need to make sure that we are entering a true one. So in this case scenario, we are going to wait for confirmations in the form of price coming back, retesting the structure. And if we now notice that sellers are finding it difficult to go deeper into the descending channel, which will reflect as continued buy pressure above the structure, then we can join the uptrend move. So there is no hurry to buy the GBPUSD even when that area gets broken. You know why? It's going to take some time before a retest happens. It could take a day, it could take 12 hours. So we need to wait patiently around that area, wait for continued buy pressure above the structure before we jump into a buy. So at the moment we remain bearish, but we are open to the idea of buying only when the resistant line gets broken and retested to the upside. So that is basically what I am looking at on the GBPUSD. So we just have a simple setup here, a range bound structure right around the resistant line of the descending channel. Let's wait and see how the market will react. So I have a sell running. Hopefully it goes as expected. So if you have any question, I feel free to let me know in the comment section. I'd love to hear. Or you need some clarifications, feel free to let me know in the comment section. So I'll take another 5-10 seconds and then come back to continue on the next asset on our watch list. Stay tuned in. Okay, so I guess we are all good to go on this one. So I wish us all the best of luck, and I wish myself to the best of luck on the GBPUSD. So moving on to the next one. So the next one on my watch list for this week is the USDJPY, that is the US dollar against the Japanese yen. And what I was able to do here was to consider the last 5 to 6 weeks of price action to determine what is likely going to happen this week. And of course, the last 6 weeks has shown that the US dollar is doing pretty well against the Japanese yen. As you can see, after connecting the series of high and lows, we have a beautiful ascending trend line to confirm this bullish momentum, except for last week when we saw price decline tremendously as profit taking began around the 153.275, bringing price back into that ascending trend line. And look at what happened immediately price got there on Friday. We saw some renewed buy pressure come out from that area. So I want to see this old downtrend scenario that started on Thursday of last week to be the yen doing a pullback in that direction. That is, we had some favor from we had some positivity around the yen, as the yen gained a little bit of value as market did profit taking activity. Now, the political change in Japan, of course, had sparked expectations of more spending and loose policy. And though Bank of Japan officials are still hinting at possible rate hikes, but with the new president and the impression majority of market participants have about her, there is a likelihood that the Bank of Japan might not raise interest rates anytime soon. At the same time, the Fed is also expected to cut rates at least twice this year, and this is narrowing the US-Japan gap, that is the gap between the interest rates. So currently, Japan is on 0.5% interest rate, right? And then the US is on 4.25. So the differential in value is still in favor of the US dollar. So this tug of war leaves trader watching both central banks closely, and this is going to likely keep the sentiment a little bit choppy. Now, to help me understand and see how the market is digesting this information, I have my key level going into this week at the 150.00 area. What a psychological level that is, isn't it? As you will see that in the last 2 to 3 weeks, it had played a significant role in the direction of price action. So at some point, buyers were finding it difficult to break through, as you will see here during the last week of September. So it was more like a resistant line. And then we saw what happened at the beginning of this month. Price did break out of that structure, as you will see, broke it out, and look at what is going on. It appears price came back to retest that structure, and interestingly, that structure lines up with that ascending trend line, making it a sweet spot to look out for trading opportunities. And immediately price got in here, we saw buy pressure resume, which theoretically makes it more likely that price is going to rise in the nearest future. So at the moment, I already placed a buy position on the USDJPY. I think it's running in profit. Okay, it's just small profit at the moment, and hopefully the momentum will continue to the upside. So let's see how the market is going to play out from this particular point. But if and my TP definitely is going to be, I'm yet to place the TP, but it's going to be around the 153.275 in the meantime, while a breakout retest could now give us more opportunity to buy. But in the meantime, TP will be around the 153.275. That's about 250 pips of profit on that one. Now, if we are looking at things from a, of course, we are looking at things from a long-term perspective, I will not be selling the USDJPY except this ascending trend line and that key level at the 150 is broken to the downside. So by the time price can break down this trend line, this will be the first time it will get broken in the last 6 weeks. So if a breakdown can happen, definitely that could incite selling ideas. But pending that time, I want to maintain a bullish perspective. Now let's scale down into the execution time frame. That is the 1 hour time frame. Let's see how the market has been playing out since this week began. So I will just zoom in to the structure. So as you will see here, the market started the week on a bullish note. Price started somewhere around here, around the 150.375. We saw an engulfing bullish candle. Price tested this point at the 151.200, came back into the structure, and in the last 4 hours or so, the market has been finding buy pressure, and I can see a temporary ascending trend line here on the 1 hour time frame that could play a significant role in guiding short-term trading opportunities, right? So I bought around here actually. If you look at the structure, I'm expected to buy at the 151.200, but I have some capital to spare and risk around this area. And the reason why I bought here is basically because of the short and the small stop loss we have here. It's closer to the previous structure, and that's about 30 to 35 pips of stop loss, which makes it a little bit reasonable for me to join there. And if price moves, maybe gets close to this area, maybe about 30 pips, I'll move my stop loss, secure the previous the position, and then wait to add more position, have a breakout retest of the 151.200 area. So on the USDJPY, I will remain bullish on this one. I'll continue to monitor this trend line. If price breaks it down and retest it, that is, buyers find it difficult to climb back up, I might want to close even before price gets to my stop loss. So I keep monitoring this, and if anything new comes up, I will definitely update us on my Telegram platform. Now, selling the USDJPY, well, maybe market could start believing the Bank of Japan's officials narrative of rate hike expectations, which I'm not sure that is going to be the case. Or maybe we could have headlines that says the Bank of Japan wants to intervene, and if that scenario pops up in any way, we might likely see a crash here. Now, technically and from a long-term perspective, like I said on the 4 hours time frame, I would love to sell only the breakdown retest of both the trend line and that 150.00. But if we see some headlines during the week and then we see strong signal that sellers are getting stronger after a breakdown of the trend line, and we see some lower lows and lower highs on maybe the 15 minutes time frame, I might want to consider doing some selling and then move stop loss accordingly when price gets into the trend line, where I will be looking forward to see if price will break it down, retest it, then continue the downtrend, or buy pressure resume from there to help me initiate a bullish expectation here. So let's be open-minded on this one as always, and let's see how the market is going to play out. So if you do want to be part of this bullish move with me, I'm sure you want to be joining right around this trend line as I have explained here. Okay, all right. So that is my look into the USDJPY. If you have any questions, feel free to let me know in the comment section. So I'll take another 5-10 seconds to see if there are any questions before we move on to the final asset on our watch list. Stay tuned in, guys. Okay, so I guess we are good to go. No questions, and how the structures are accordingly. Let's see how the market will play out, and I of course wish us the best of luck on this one. So moving on to the final asset on my watch list for this week. So the final asset on my watch list, of course, is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And what a tremendous last couple of weeks we've had on the XAUUSD, as price continues to find new high, break record highs, and continue to show signs of uptrend continuation in this market. And of course, gold is supported by safe haven demand as investors worry about global trade tensions, geopolitical risk, and of course the prolonged US government shutdown, which continues to favor safe haven demand like the gold commodity. Now, expectations of more Fed rate cuts, central banks are buying more of gold commodity, and also inflows into ETFs also is boosting the sentiment. However, occasional easing of the US-China trade fears can spark short-term profit taking. Of course, we cannot ignore that possibility, and that reminds me I need to move my stop loss on the current buy position I have. Wow, it has moved over 200 pips now. Wow, that's great. So let me just move my stop loss to 4236. Let me 4240. Let me secure some small profit on this one. Okay, sorry about that. Okay, so I just moved my stop loss on that buy position to secure some profit. So basically what I'm saying here is that we need to take into account potential short-term profit taking following this intermittent easing of US-China trade fears, because I had Trump saying this morning that full tariff on China may not be sustainable for the United States, which of course has pepped down the narrative of uncertainty in this market. Now, if we look at things from a technical standpoint, prices within uncharted territory, we cannot ignore that idea. It's within uncharted territory, and when prices within uncharted territory, the likelihood of choppy market scenario, uncertainties around this area becomes increasing by the day. Though the market has been very bullish, let me zoom out so we can see. In fact, I went to as far back as when was that? Okay, I went to as far back as August, and look at how beautiful the trend line is. Then we had a deviation from that trend line in September as the momentum increased, price breaking record highs with this new trend line here. Okay, now my key level going into this week is the 4,180. You know why, of course. This level was a resistant line last week before it got broken on Tuesday. That led to that record test of the record high at the 4,380. Then price came back to retest the structure on Friday, and since then we've seen some consolidation, and it appears price want to continue to the upside. So for me, as long as price remains above this key level, I want to maintain a bullish bias on the XAUUSD. And if I'm talking about long-term perspective, a breakdown of this 4,180 will be the confirmation to sell, and the sell may be going down into any of this trend line before another wave of bullish momentum began from that particular area. So now let's scale down into the 1 hour time frame, that is our execution time frame, to see how the market has been behaving since the week began. Now, zooming into the 1 hour time frame, let's zoom in and see things much more clearly. So the week has started with a little bit of indecisiveness as price remained confined within the 4,274 and the 4,219 in the last 10 to 11 hours. And you know what that means. Whenever we identify range bound structures, it tells us that negotiation is going on between buyers and sellers, and whosoever wins will be reflected on the chart as either a breakout telling us buyers have won, or a breakdown telling us that sellers have won. Though for me, I bought very early this morning. I'm supposed to buy the breakout of the resistance line, but the fact that as soon as price got here, it climbed back up. We saw it happen here during the Asian session. Then I also saw an hammer candle, though price did not touch here. And for me, that could be a sign that buyers still have a say in this market. Then secondly, it was more or less close to the previous support here, which makes it a good point for me to buy. So I bought there this morning, and as you can see, I have about over 200 pips running in profit at the moment. So I just moved my stop loss to secure some profit. For those of you who one way or the other may have jumped into this position, please move your stop losses right now, secure some profit, and let's see how the market will play out from this point. And for those who are yet to join, well, at this juncture, you want to exercise patience and let's wait for some confirmations to happen. And when I talk about confirmation, I'm saying breakout retest of structure, and the resistance line is the nearest structure to buy from at this point. So a breakout retest will definitely welcome more buying opportunities for me. So I can afford to place a buy stop order here, that is risk some of the profit I had made and test waters there and see if it's going to fly. So I'll place a buy stop order again above that resistance line with the hopes that price will break it and continue to the upside, hereby maximizing that bullish move that I'm seeing from this point. So for me, I still remain very bullish on the XAUUSD based on the global trade tension worries, geopolitical risk, and the prolonged US government shutdown, which obviously is keeping the market in an uncertain mood. So bullish expectations for me at this point. Now, in as much as we look into buy, you know how we do it here. We always try to keep this objective stance. We take into account the possibilities that both buyers and sellers have. Now, with the scenario we have here, from a short-term perspective, selling the breakdown of the 4,219 could be an opportunity. So for those of us who are day traders or scalpers who are willing to join some short-term trading opportunities between here and here, is about 300 pips. That's massive, you know. So if you want to be joining that move, a breakdown retest, I might join too as well, depending on the structure that emerges after the breakdown of the 4,219. So if price breaks down structure, buying, selling is making sense. And then as soon as price gets here, you want to secure some profit, then monitor if a breakdown will happen. If a breakdown happens, that definitely welcomes more selling ideas. But if that is not the case and buyers continue to reject selling pressure, then that could be a platform that will send price climbing up again. So that is my simple view on the XAUUSD going into this week. I do hope I made myself very, very clear. So this is my view here on the XAUUSD. So I do hope I made myself. If you have any questions, I'll take another 5-10 seconds to see before we go ahead and round off on today's Forex Morning Mastery. All right. So I guess we have come to the end of today's Forex Morning Mastery. So that's a wrap for today. And we were able to walk through the US dollar market dynamic. We went to talk about the oil, the US crude oil. We went to talk about the GBPUSD, the USDJPY, and of course the gold commodity, where we were able to identify simple trading setups that will be guiding my trading decisions today. right? And remember, analysis is only a part of the whole work, right? The real hedge comes from how you show up consistently and manage yourself in the market. And for those of you who are joining me for the first time, I do hope you are able to gain one or two things from what we have discussed here. And if you did, why not join us during our next session, that is on Wednesday, where we shall be coming here again to review how well these assets have done, and of course how we can use the information from both technical and fundamental to prepare ourselves for the second half of the week. So I look forward to seeing you all then. If you have found value here, drop a like, share this with a fellow trader, and subscribe so you don't miss the next session. And if you are ready to go deeper, I want you to check out my Rebuilding the Trader Within series. The link is right in the description box below. So it's more like a powerful reset for traders who are stuck in cycles of fears, over trading, and inconsistency. Okay, right in the description box below. Check it out. You'll get a lot of value from it. So until next time, trade smart, trade consciously, and I do wish you a wonderful evening. Bye.